Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. Bitcoin lives in cyberspace, no tariffs in cyberspace. The big appeal of Bitcoin is it's not physical, it doesn't have weight. You can settle anywhere with anybody in a few minutes. And so gold has always been too heavy, too slow, and you can't really ship it across an ocean. And if you do, now you're getting tariffs. So I really think it just reminds everybody why the digital version of gold is better than actual physical gold. And I think it's going to catalyze a new wave of institutional adoption of Bitcoin.
The Trump administration may have just lit the fuse for Bitcoin's next parabolic move, and it's coming from an unexpected direction: tariffs on gold bars. On Friday, the administration announced that imported gold will now face reciprocal tariffs, shaking the gold market to its core. For decades, gold has been the ultimate safe haven, but now this new policy could push investors to rethink where they store their wealth. And that's where Bitcoin comes in. Bitcoin maxists like Michael Saylor are already calling this a game-changing moment. In a recent interview with Bloomberg, Saylor didn't hold back. He doubled down on his view that Bitcoin is digital gold and is in the process of replacing gold entirely. According to him, this isn't just another headline. It's a fundamental shift that will funnel capital out of the gold market and into Bitcoin, driving prices higher in the process. Think about it. Gold now faces trade restrictions, shipping costs, and political risk. Bitcoin doesn't. It's borderless, censorship-resistant, and can be moved across the world in seconds without touching a single customs checkpoint. When you stack those facts side by side, Saylor's confidence starts to make perfect sense. And with Bitcoin already flirting with critical price levels, this could be the spark that ignites the next leg up. Not in months, but potentially in weeks. Every gold investor who feels the sting of these tariffs is a potential Bitcoin buyer waiting to make the leap. So the question is, are you ready for the capital shift of a lifetime? Or will you be watching from the sidelines while Bitcoin runs to new highs? Before we dive deeper into the numbers, I want to hear from you. Do you think tariffs on gold are bullish for Bitcoin, or is this just hype? Drop your thoughts in the comments below. And if you're new here, make sure to like this video, hit that subscribe button, and turn on notifications. We drop daily updates on Bitcoin, crypto news, and the trends that matter, so you're always one step ahead. Now, let's get back to the video.
I still think the vast majority of the capital flowing into the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet.
So it sounds like you're not concerned that perhaps the fact that we're seeing these other digital asset treasury companies come to the fore here, expand into altcoins, you're not concerned that that's going to detract attention away from what Strategy is doing?
I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets. And what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments all around, and capital is going to flow into the digital economy due to that.
Michael, explain the assets, the unique assets to which you offer investors access, because it's not just Bitcoin treasury company. You have, you think, a unique selling point compared to others trying that strategy.
Yeah, the real compelling idea of a Bitcoin treasury company is we hold a huge stack of Bitcoin, about $74 billion worth of Bitcoin. Bitcoin's a 21-year duration asset. You got to hold it for 21 years if you want the full potential. And it's about 50 vol and 50 ARR. Most people don't want that amount of volatility, even though it's got that performance. And who wants to wait 21 years? So what we've done is we've created structured Bitcoin in the form of Strike, STRK. We give you the Bitcoin upside, a guaranteed dividend, and principal protection. And that's an alternative for people that don't want the roller coaster. We've created a long duration senior credit instrument called Strife. Think of it as a 21-year Bitcoin-backed bond. Pays about 8.5% dividend yield right now for people that just want that quarterly dividend yield and a seniority in the capital structure. And then you've got a high yield long duration instrument called Strife. It's actually paying like 11.5% dividend yield right now. And so that's for people that want high yield forever. And they'd rather have 11% quarterly than take that's guaranteed than the roller coaster of Bitcoin. And then the most exciting thing we've done just a few weeks ago, it's the biggest IPO of the year. It's called Stretch, STRC. And STRC is like a monthly Bitcoin-backed bill. And so think of it as a Bitcoin alternative to treasury bills or money market funds. It's 9% dividend yield, monthly cash pay. And if you just want to park short-term cash and get paid 9% dividends and have it powered by Bitcoin, you're not taking duration risk on the interest rate. You're not taking the Bitcoin volatility. And that's our most successful offering to date.
Well, Michael, I do want to talk a little bit more about your financing. You touched on it a little bit. One of the other trends that you've started is issuing convertible notes to fund your Bitcoin purchases. You've also been issuing preferred stock as well. When it comes to just straight MicroStrategy shares, we know that's very popular with retail. We know convertible notes have been popular with more of the Wall Street crowd. Do you have any insight on who the end buyer of your preferred stock is?
Well, right now we've had really extraordinary demand from retail. In our last offering, I mean, we started with about 30 or 40 million of retail demand on the first preferred, and then it increased to 60 million on the second preferred, and then 120 million on the third preferred, and about 600 million on the fourth preferred. So retail's off the charts. We've also got a lot of institutional long investors, people that are holding. Look, if you like Bitcoin or if you like MSTR, these are all pretty compelling for any pool of capital you've got. And then, of course, a bunch of hedge funds also got very excited about this. There's lots of different ways to trade these against each other. So a good mixture of institutional as well as retail investors buying into all these preferreds.
Now, imagine a world where demand explodes overnight, but no matter how badly people want it, no one can make more. That's Bitcoin. Jack Mallers puts it bluntly in his latest Bloomberg interview. Unlike iPhones or McDonald's burgers, you can't manufacture more Bitcoin. The only way to get it is to pay more. And when capital floods in from Wall Street, ETFs, and maybe even governments, the price won't just climb, it will hunt for the ceiling. Mallers isn't interested in Ethereum, Solana, or any altcoin distractions. He calls Bitcoin the only asset worthy of being a company's treasury foundation, not a cool tech stock chasing Amazon's $2 to $3 trillion market cap, but a shot at tapping into $400 to $500 trillion of global stored wealth. Think about that. Half of everything humans own in currency, debt, real estate, and gold exists just to preserve value for the future. Mallers says Bitcoin is coming for it. All of it. Let's get more insights from Jack. Take a listen.
You know what's fascinating about the asset, and it's not intuitive because it's so rare, is that, to your point, it is definitively scarce. So if everyone in the world wanted an iPhone, Apple could make more. If everyone in the world wanted a McDonald's cheeseburger, McDonald's could make more. The fact that Bitcoin cannot increase its supply means the new supply comes from the market. If you want more Bitcoin, you don't go to the Bitcoin factory to get one. You have to go up in price. Is there enough Bitcoin for me at 120,000? No. Okay, 130, 140, 150. So I tell you what, there's always Bitcoin available. Just depends on what you're willing to pay for it. And so what I think will happen is this price will continue to discover higher because Bitcoin is the scarcest thing. It's inelastic to the amount of demand that searches for it. So the amount of buying power that we're seeing from the capital markets, from the ETFs, and potentially from nation states like the United States, I think they'll find the supply they're looking for. They're just going to have to go get it at a higher price.
Would you expand to other digital coins, for instance, become a treasury company for Ether or Solana or something else?
Absolutely not. And I'll tell you guys why. I made you laugh there,
Yeah,
didn't
because
I?
you guys are all maxis. Like, you talk to somebody who has an Ether treasury company, and they'd say the same thing about Bitcoin.
Yeah, so
You can't mix the two ever?
Well, little history lesson. The term maxi was actually invented by 𝗕𝗏𝗘𝗥𝗘𝗥. It was a diss. It was slander. You know, I now take it as a compliment. But to be clear, I don't self-prescribe that. Little background on my opinion. Okay, us humans own a little over $900 trillion worth of stuff. Currencies, sovereign debt, real estate, precious metals, fine art, all of the things that we collectively own as a species. About half of that, so call it $400 to $500 trillion worth of it, we're using to save money, right? You own the $10 million art painting not to put on your wall so your toddler can throw spaghetti at it and ruin it. You own it because you want to sell it for $11 million in the future. You own the real estate not to consume it because you're living in it, but because you're trying to save and build a real estate portfolio. So that the amount of wealth humans have created that they want to bring with them tomorrow and save into the future is about $400 to $500 trillion. To me, that's what Bitcoin's going after. It's that pristine store of value. It's that pure money, right? What is Ethereum? What is Dogecoin? What is Solana? To me, I don't know. At best, a technology. Are these things going after Apple, Amazon? If they are, let's go out and give Ethereum credit that I don't think it deserves and say it's going to achieve what Amazon has achieved. Okay, $2 trillion, $3 trillion worth of value to society. Reasonable, nice, a new cool tech stock, and that's if they go on to achieve that. If Bitcoin goes on to achieve a small fraction of the $400 to $500 trillion that humans are looking to bring with them tomorrow, we're talking about tens of trillions of dollars of appreciation. So it's an orders of magnitude larger problem Bitcoin's going after. It's an orders of magnitude sounder bedrock to build a treasury. I do not want to build a treasury on potentially the next Amazon. I want to build a treasury on the new gold, on the new sovereign debt, on the new currency, on the new dollar. So that, for me, our shareholders should know I will never own another asset outside Bitcoin.
Jack, still a lot of skeptics out there who might watch this and say, wait a second, is the point of Bitcoin just for the people who have it now to get wealthier and wealthier? The largest holders of Marathon, of you guys, and of Strategy, convince them that there is a use case beyond just buying and holding, that this is a useful technology?
Well, I think the use case for Bitcoin from the highest level possible is I've created value and I want to keep it. That's it. I got a chuckle out of you. That's true. I got up out of bed. I sacrificed. I worked. I commuted. I did tasks. I created products. I created value for those around me. I want to keep that value.
But even though it's called a cryptocurrency, it's not used widespread as a currency. It's used as something that will accumulate, or that people think will accumulate in value.
Yes, I think the definitions of currency and money and how we think of medium of exchange, store of value, I think it gets too complicated. And sometimes Bitcoin is so simple that people don't believe it can be that simple. The reality is money is what you acquire in exchange for your effort, your time, your energy. It's our time and energy in abstracted form. And I exchange my work hours for it so that I can later get the stuff I need in my life. I want to go to Whole Foods and get a steak. I want to go on vacation. I need to pay rent. That's what money's for, is to allow me to create value and take it with me tomorrow. And that's the use case. And today, it's increasingly difficult to achieve that. I can't save it in dollars. We all know that. Okay, you're going to force me to understand Japanese central bank monetary policy? You're going to force me to understand what tech stocks to pick? No, how about something that's definitively scarce, no one can inflate, I can store for free, I can move cheaply, and that I could put it in my brain. And that's the use case, and we all have that use case. Nation state, corporations, families, individuals. Simply put, I think everyone can find value in a technology that is open source and solve that for everybody.
And that's a wrap on today's deep dive, with Michael Saylor standing firm, calling Bitcoin the world's new digital gold. But here's the twist. If tariffs start hitting physical gold, could that be the spark that sends Bitcoin into a parabolic supercycle? Jack Mallers isn't pulling any punches. To him, Bitcoin isn't like gold, it's better. It's the new gold, the new sovereign debt, the ultimate base layer for global money. And in his words, he'll never own anything else. Now imagine this. Bitcoin grabs just a slice of gold's $500 trillion market. That's not just a rally, that's liftoff. The only question is, Will you already be strapped in for the ride or scrambling to buy a ticket mid-flight? Drop your thoughts in the comments, smash that like button, and share this with someone who needs to hear it. And if you haven't yet, hit subscribe for daily Bitcoin and crypto updates. Thanks for watching, and I'll see you in the next one.